What's up, everyone? It's Caddy with Money Investing. So thank you so much for joining. I really appreciate it. If you guys can see me and hear me, just give me a thumbs up. And we're all set to go. We're all ready to go. I just want to make sure the audio and the video is working well. Thank you so much for all the great birthday wishes. Yes, it is today. I wanted to celebrate it, of course, by going live and celebrate it with you guys. You guys have all been a great part of my life for the last couple of years, and I really appreciate each and every one of you. That's exactly why I wanted to celebrate it with you. So thank you so much. I really appreciate all the best wishes. I am getting older. It's pretty crazy now. It's starting to really feel that the time is moving really fast. You know what I mean? It's like it's getting to a point where like now I'm closer to 30 than I am to 20, right? So it's absolutely wild. So again, thank you so much for joining. I really appreciate it. And yeah, thanks everybody. Thank you so much. And like I said, like I was saying earlier, that you guys have been such a great part of my life that I wanted to share this day with all of you. So the markets are slightly higher, pretty much flat. We're all waiting. 26 is old. We're not. It is old. It is old for me. Like I'm starting to feel really old now. It's crazy. So. But of course, it's all on a relative basis, right? Of course, for somebody who's 30, 26 may not be old. For somebody who's 20, of course, 20 might be old compared to what they were like in 18. So really, it's all relative. Age is just a number. But that's how I feel. That's what it is. That's why I didn't really want to celebrate, because it's not really like a celebratory moment for me. But hey, thank you so much. I really appreciate you guys. So yeah, the markets are definitely moving a little bit higher. We do have the SPY kind of rolling over a little bit. Palantir reported earnings right now, so they're slightly moving down 1.7%. I have their earnings right over here. So what they really reported was a 22% growth on a year-over-year basis. So that was just a little bit over 478 million. The market should celebrate and also go green. So yeah, we'll see what ends up happening. I think the big anticipation today really is going to be from the CPI numbers that come out Thursday. So that is going to be really important for the markets, of course. And we've got our whole prediction set, right? Bear case, base case, optimistic, and bull case. Your sound has echo. All right, so I don't have the microphone, right? As you guys know, that my red mic pretty much gave up on me not too long ago. I just want to make sure that there's no echo. So here, hold on one second. So let me know if the audio is good. Again, I'm just using the default audio from the MacBook, so hopefully it's good enough. It's been good like in most of my videos, but I'm not really sure how the live streams have been. But just give me a thumbs up if you are able to hear it just fine. There might be a little bit of audio. There really shouldn't be that much, but yeah, just give me a thumbs up if things are working well. Okay, perfect. Sound is perfect. Great. Oscar, thank you. So U.S. revenue grew 31% on a year-over-year basis for Palantir. Commercial revenue was up 53%. Government revenue was up 23%. So again, they're growing their revenues, which is a good thing. When it comes to adjusted free cash flow of 37 million, representing an 8% margin. Again, the key word here is adjusted. Because again, we know the difference between GAAP and adjusted. Adjusted is obviously going to take into account a lot of adjustments, right? Which is stock-based compensation and other non-cash expenses like depreciation, amortization, all those things. Total contract value, 1.3 billion, including US contract value, 1.1 billion. And commercial customer count increased 124% from 59 customers to about 132. So it's a pretty substantial number. But loss from operations, again, $62 million, representing a margin of negative 13%, but up 1,000 basis points from a year-over-year basis. So this really was the number here. Again, adjusted EBITDA is what they're coming down to, but they've got a pretty substantial, I'm assuming, stock-based comp there that they're adding back to come down to their adjusted EBITDA, which is positive. Same thing that we analyzed with SoFi earlier. Net loss 123, almost $124 million. That's in the fourth quarter. And then if you take a look at the full year so far in the 9 months, they've got a net loss of about $404 million with an EPS of about negative 20 cents per share. And share count's also gone up to over 2 billion shares versus 1.8, 1.9 million same time last year. So yeah, it's gone up to over 2 million shares. Same time last year, it was at around 1.9 roughly. So that's where we are. The stock is a little bit unchanged right now. It's only down 1.89%. Again, we'll kind of, their earnings call are going to be going on in just a few minutes. They're probably going on right now. So we'll listen in later. I'll do like a summary video of that, and then we'll break that down after. So, okay. Audio is fine, but there appears to be a red spot in the middle of your camera screen. It's not the red spot, Bass. It's actually a tradition here in India that you put like a tika. So that's actually a thing that I've actually put on my face. So it's a more traditional thing in India. People from India will probably understand, but yeah, it's not a camera thing. All right, so let's see. Sound is good. Yes, midterm elections are coming up tomorrow. So again, the markets are definitely going to be anticipating, that as well, and they're going to get priced in. Sorry, I'm playing your video from two sources, YouTube and Discord. Okay, perfect. So you can just play it from Discord. So I know, it's just kidding. Happy day for you. Yeah, okay, thank you. Really appreciate it. And in observance of that, I have, taken your guys' suggestions into account from my previous videos, and we have the biggest discount right now for our courses. If you're interested, there is a 60% discount for the entire bundle. All you have to do is pretty much apply the coupon code birthday. That's it. That's all it is to get the additional 20%. So the first link down below, it's already 40% off, and then you can get another 20% off with that coupon code birthday, and that'll give you 60% off, pretty much more than half off for the bundle. And for all the individual courses, 50% off also. Coupon code's going to stay the same across the entire website, and again, it's going to be birthday if you're interested in of course taking advantage of that. So when are we having the cake? Kevin, the cake's actually going to be here in about an hour and a half. So at 9 p.m. my time, so it's going to be pretty late. I probably won't be live till then, but I have some friends and family coming over. But of course, you guys are all family. So we're going to have a cake in about an hour and a half. I'll post a picture of that. So yes, we'll probably do that. So yes, but again, celebrate it if you guys want to. Definitely appreciate you guys a lot. And like I was saying earlier, a lot of you guys have joined now, but you guys have been a big part of my life for the last 2 years. That's why I really wanted to celebrate it with you. And it's just been an amazing last couple of years, filled with a lot of challenges, of course, but I would have not been able to do it with all of you. So thank you so much. I really appreciate all the great wishes, and really, truly grateful for each and one of you guys. So thank you. Really appreciate it. So, all right, anyway, back to the markets here. I've got a couple things to go over. Of course, the earnings are really important this week. We've got some retail stocks. So Palantir is out of the way. We've got NEO later. We've got AMC later. We've got Walt Disney. A lot of these companies are reporting. But I think the bigger really question is going to be the CPI, the inflation numbers, and what they end up looking like. This is the consensus right now going into Thursday. And this is really what's going to be moving the market, right? I think we're going to see a lot of the calm before the storm. Like there's going to be a lot of anticipation, for that CPI numbers. But the consensus really is pegged for some hot reads. Again, we're going to see 0.7% increase month over month. Year over year, probably going to see another 8%. That's the consensus there. And ex-food and energy, so core, expected to go up 0.5%. Again, on the back of shelter, which is pretty much going to be driving core, and ex-food and energy year over year, 6.6%, so expected to remain flat and pretty stable. I think the increase in total CPI that we're seeing from prior 40 basis points to 70, I think the most of it coming from energy. I think energy was higher in the month of October. That's what we discussed in our previous videos as well. So that really where that 0.7% is coming from, because that's a pretty substantial month over month number. Because if you annualize that 0.7%, right, it's 8.4. So that's a pretty substantial number on a month over month basis. So if you hit that 0.7 or higher, I think that's going to really be a bear case for the market. And don't expect the markets to really be very pleased about that, of course. But if you get down to 0.5 or lower, the best case scenario, really the bull case scenario, or the extreme bull case scenario, would be if you see deflation, right? So if you see prices coming down on a month-over-month basis. That's at least the hope from Cathie Wood, I'm assuming. Deflation is also the expectation from Jeremy Siegel, from a lot of people that have been saying that there's deflation brewing inside the economy. It's just not showing up because it's a lagging indicator, so eventually it will show up. So we're just going to have to wait and see whether it actually does reflect in the inflation report or does it not. So this is going to be for the month of October. We still have a couple more prints for this year. November, December is going to come out, of course, later this year. And of course, that's what's going to drive monetary policy from the Fed later this year. Another thing I wanted to point out is this is also very interesting, right? When and how we end up at a less than 2% target. But since we are going to see a 0.7%, well, that's not going to be great because this table obviously only goes out as far as 0.4%. So if we are going to see a 0.7% increase, that's going to be pretty substantial. That's going to keep us above 8%. And then eventually, if we are on this path of seeing 0.5, 0.6, 0.7% month over month changes, then we don't even get down to 2%. Literally, we don't even get down to 5% until like August of 23, right? So it's going to be a long and challenging road for the Fed to get inflation back under control. They'll definitely most certainly have to induce a recession in order to hit their numbers and get it back under control. Because if they don't, inflation remains sticky and we're not going to see 2% in a very long time. So really that's what's going to be driving the market. That's really what's going to be dictating the market here. Dan says, happy birthday, old man. Really? You gotta call me an old man? God. Thank you. I really appreciate it. But yeah, it does seem like I am getting... where do I even start? Time's flying by, isn't it? Like when you get older, time flies. Like I don't know if it's just people get busier when they get older, but it's crazy. Like I didn't feel like years were going this fast when I was like 18 or 19. You know what I mean? Like it's just crazy. I still remember, it literally just feels like yesterday when I was celebrating my 25th birthday. The last year is just like that, you know? It's crazy. All right, so Berkshire had their earnings this morning also. Did you look at it? Yes, so Berkshire did. I thought they already reported over the weekend because they do report a little bit earlier than usual, right? So let's take a look how they're doing right now. So we'll just go to the BRKA. Yeah, slightly up. So Berkshire Hathaway, the Class B shares are slightly up 0.97, almost 1%, pushing higher. So, of course, beating on earnings very substantially. So $4.89 coming in versus $2.80. And revenue was a slight, very, very small miss, just under 1%. So I think the operating margins were substantially higher for Berkshire Hathaway than what analysts were forecasting. And they also purchased a lot of their own stock once again. And that's what Warren Buffett loves to do, right? Pretty much buying a lot of their own shares back. And that's one of the reasons I think, Apple obviously has been higher because they've been buying back a lot of their own shares, and that's as a result pushed up the earnings a little bit. But speaking of Apple, they are down pre-market because I think there were some talks or there's some reports over the weekend talking about Apple 14 is also, once again, Brandon saying you're old. Really, guys, it's supposed to be a happy live stream. You're not supposed to see me cry. I'm just kidding. So yeah, Apple, there were some reports here that they are going to be hindering some iPhone production because of the COVID-19 restrictions at the factory in China, the Foxconn factory. So that's the world's biggest iPhone production site. So as a result, they're down a little bit over 1.5%. Meta, on the other hand, is pushing up 2.6%, as there was a report on the Journal saying that they are preparing for announcing the largest scale layoffs this week. And we heard from Mark Zuckerberg himself. I think the employee count is supposed to remain flat going into 2023. They're not expected to at least cut a lot of employees. They're not supposed to add, but they're also not expected to cut by a substantial amount. So we'll see, what ends up happening with that headcount. This is a pretty much biggest drain on any company, right? If you think about the biggest expense for any company is employees, right? It's actually salaries and wages. So this is a big sort of deal when it comes to their operating margins, their bottom line margins, their profitability. So any type of cuts there is going to drastically boost their earnings to the upside, considering that they can keep their productivity higher and they can pretty much just cut off some of that fat and become more lean and more efficient. So that obviously is acting as a bullish catalyst for the stock. It's up over 2.6% pre-market. And we also talked about Berkshire Hathaway here. And then Okta, reported some earnings, I think last week. Not sure. Let's take a quick look. Yeah, so Shashing says, I agree that the time goes faster as you grow older. Yeah, it is. It is definitely faster here. Siren says, imagine us working people 8 a.m. to 6 p.m. time doesn't fly, it disappears. It really does. I mean, it just bottom line is, I think the older you get, the busier you get, not older, the busier you get, the more just time flies like crazy. It just absolutely disappears. And you can't even stop and kind of experience all these moments. It's just crazy. So Anyway, so again, thank you so much. I really appreciate it. So Yenser, no discount for the tech analysis course for the ones that purchase fundamental. There is a 50% off today. So literally half off if you're interested on across. So technical and fundamental individually, you can get 50% off, coupon code birthday. But if you want the bundle, which is including both fundamental and technical analysis, that is 60% off. So that is like literally the biggest discount we've ever, issued. And probably it's going to be only for one day because 24 hours, that's how long it's going to be. So it's only going to be for today. And again, the coupon code is going to be birthday. So all you have to do is just go to the site, apply that coupon code, and you will be getting 50 to 60% off, depending on which one you go for. So again, thank you so much. I really appreciate it. Dewey, first shots on me. Cheers. Thank you. I really appreciate it. Anyway, so it's 9 a.m. Let's just do our poll. Let's just see where the consensus is right now for the market. So we'll just start our poll here. So markets today, we'll do green, we'll do red, and then we'll do flat. All right, perfect. Let's do this. Let's see what everybody's thinking for the markets today. So Palantir is the only one that's scheduled. BioNTech also, I think it's moving higher a little bit. So let's see. BioNTech actually slid 3.4% despite reporting better than expected quarterly profit and revenue. Results were down sharply from a year ago, with both profit and revenue off more than 40% of year over year. So definitely coming down quite a bit here on a year over year basis. We did go back about an hour. We did go ahead an hour. So markets again are going to be opening a little bit of a different timing than previously, right? So now market opens at 6:30 a.m. Pacific, 8 p.m. Indian. And then of course different times based on where you are in Europe or Asia or wherever you guys are based out of. So different timings now. So all right, let's take a look at the bond market. The yields are pushing higher, 4.167%. So definitely on the move again, back to almost 4.3%. So this has been the peak on October 21st. Since then we did pull back a little bit, almost 10%. Right now we're on the move higher, as we've got that rate hike of 75 basis points, and right now it's kind of pegged for 50 or 75 going into December. I think there's going to be a much bigger debate between 50 and 75 than it's going to be between 50 and 25. I think 50 and 25 is not even a question. I think it's going to be more about 50 and 75. But again, a lot can change depending on the inflation print that we get in about a few days. So inflation, if actually it comes in at way below expectations, and I'm really curious to learn more about your analysis as well. Like, do you think we're actually going to see deflation, or do you think that inflation is going to come in, hit the base targets, and then that's going to be it, or if it's going to come in way hotter, way higher than what the expectations are? I think again the big wild card really remains shelter. I think that's something that we have little to no visibility on. We've read some reports that suggested that inflation for rents or inflation for shelter prices are really rolling over. They're coming down. But then in actuality, in reality, that's not the situation, right? That's not really the case, because with the rates going higher, more and more people are renting, and more people are, pretty much driving shelter prices higher. So, and Jeremy Siegel's obviously been very vocal about his perspective on shelter, that it's a very lagging indicator, and eventually it'll come down. So I think it's only a matter of time before we find out, what's really behind these inflation numbers. All right, 9 a.m. in New York. Yep, so in 30 minutes, the markets will open. We'll get started there. Again, thank you so much, everybody. I really appreciate it. Happy birthday from France, Caddy. Really appreciate your video, Sam. Thank you so much. I really appreciate it. Hope you're having a great day. Yeah, perfect. So yields really are putting pressure on equities. It's not a surprise. We've talked about this before. As interest rates go higher, not only on the Fed fund side, but also on the 10-year yield, it's obviously putting some more pressure, downward pressure on equities, which is why we're seeing valuations come down and whatnot. And again, speaking of valuations, we've got our P multiples and charts and whatnot. So right now the S&P 500 is trading at around 3770. So if we update that number over here, that's another 100 points. We're once again trading at a valuation of about almost 17 times earnings based on 224. Now this number may get revised down as we are in Q3 earnings, and we get more and more earnings come out, more and more guidance released. This number may or may not get revised down. In my opinion, it will be. It'll come down from 224 maybe down to like 220s or even 215s. But if and when it does, like let's say 215, we're immediately trading up another 1 multiple for S&P, 17.5, right? And it's going to be still below the averages, but a little bit more expensive considering where rates are. And of course, forward in 2023 will also get revised down. BofA still has a target here, 200 and 218, which obviously puts us in a little bit of a higher bracket when it comes to the valuation as a whole, for the market. And this gives you a little bit of a bird's eye view of where the S&P 500 really is trading on a P multiple basis compared to what the averages are. And then we've also talked about, depending on where the interest rates are, where it really should be trading at. The higher the rates go, and we're talking 6-7% range, then P multiples really drop in the low teens for the S&P 500. So that's where it becomes a bigger problem for the S&P 500. It's only really been about valuations because, we talked about how the fundamentals have only gotten better from 2 years ago, right? Companies are generating more revenue, more earnings, more free cash flows from what they did 2 years ago, 3 years ago. So in that sense, they've only gotten stronger. The only thing that's really changed in this equation, that's the only thing, has been valuations, right? Multiples have compressed. And I've showed you guys that statistically speaking, many of these companies trading at their lowest valuations ever, like literally ever since they've been public, right? So in that entire equation, if you think about it logically, fundamentals has gotten better, liquidity has gotten better, balance sheets are stronger, free cash flow is more positive and more profitable. The only thing that's changed is the valuation multiples compressed. And that's happened. Why? Because interest rates have gone up. So that's the environment that we're in, right? And this is not an environment which is going to be more so permanent. It could be an environment where, sure, inflation is going to be a little bit higher than the target, but eventually we're talking, 3 years, 5 years, 7 years out, inflation is on average been lower. And we have seen these cycles where it does rip and it comes right back down, right? So that's really what the game plan is going to be moving forward. There's 3 to 6 months, 9 months of opportunities here where interest rates are higher, valuations are really compressed, but they're not going to be here at these low levels forever. Perfect. Thank you so much, everybody. So Take-Two Interactive will have a good ER. Let's see. So Take-Two Interactive is expected to report later tomorrow. So after the close today. So let's see. So they already know. So we know that they're releasing a GTA 6 version now, right? It's been leaked. It's been out there. People seem to love it. People seem to really like it, what they released so far. So that's already a big positive. And I really think that game is going to absolutely take off. Like, the fact that Take-Two Interactive releases a game in every 5 to 7 years is pretty insane, right? If you think about it, most titles for other companies are usually an annual basis, like FIFA releases every single year, right? You get a new version of it. I'm pretty sure Call of Duty also releases every year. I could be wrong about that, but I'm pretty sure Call of Duty also comes out every year. But the anticipation and the waiting around this new game, GTA 6, I know, I'll be pre-ordering it. I know I'll be playing it. I know millions of people will be doing the same because just that, the vibe of GTAs is just insane. It's crazy. So if and when that game comes out eventually, right? I think 2025 is the target, might be even sooner. I think they're going to be positioned very well to take advantage of that revenue growth. And they've already done really well in terms of that growth, right? Profitability, revenue, their marketing's been fantastic. Valuations really come down. Actually, not so much. Take that back a little bit. 73 times earnings right now, it's still trading at. Let me see what their earnings were last year. They did 418 million. They're trading at about 18 billion. So yeah, they're definitely trading on a little bit of a higher valuation here. So a little bit of compression can definitely be helpful for Take-Two Interactive. 4 times sales, 20 times enterprise value to EBITDA. So definitely very, very good company, but at lower valuations and lower prices would be very attractive. So I would really be paying attention to levels around $84, $85. And after the earnings come out today, I will be doing a complete analysis on them as well because I'm really interested in Take-Two Interactive for the long term because once the game comes out, it's game over, right? It's going to be the best-selling title in the world, no doubt. So Palantir, we broke down Oscar, actually Brandon, a little bit earlier, so you can go back on the live stream and check that out if you haven't already. Again, thank you so much, you guys, for the wishes. I really, really appreciate all of you. And definitely thank you so much. Thank you. So Alfred says, happy birthday, Caddy. I'm 77 years old and retired, as active and alert as I was in 29. Trade the market for entertainment. Alfred, that's amazing, man. 77 years young though, right? So thank you so much. That's incredible. And yeah, you've got so much experience. I mean, it's crazy, right? So much experience, and I really appreciate you joining in today. How long would you say inflation is here for? That's a great question. So I think on a year-over-year basis, the comps are getting more and more difficult to beat for inflation. So it's just going to be the same thing as earnings, right? So if you come over to bls.gov, you come over to inflation, and we simply take a look at where inflation was same time last year, right? We saw back in October, like now you get to a point where year over year, it's going to be really, really difficult, right? 0.9%, 0.7%, 0.6, 0.6, 0.8, and then 1.2, 1%, 1.3. So as months go by, inflation is going to have tougher and tougher comps. So on a year-over-year basis, sure, it could start to show signs of cooling off, like it's going to potentially come down to like 8, 7, 6, 5%. But I do still think that it's going to be a little bit more sticky than dropping off completely down to the Fed's target to 2%. So I think in 2023, all of 2023, based on very conservative estimates, I could simply suggest that inflation will be somewhere between 4 and 5% on a year-over-year basis. It's not going to be down to Fed's target, but it's also not going to be like super sky high levels. In my expectation is that it's going to level off to 4 to 5%. That's going to be that number going into 2023, because not only do we have some really, really big comps to fight off, interest rates at that point are going to be just like crazy, like 5%, 5.5%. You just don't have the same amount of spending going on at 5% than you had at 0%. People are just inherently going to be spending less, a lot less, as interest rates continue to go up. And we'll see that being reflected in the economy and being reflected in the CPI print. So, okay, you're correct about Call of Duty as well. Yeah, so FIFA, Call of Duty, a lot of these titles are released pretty much every year, but then the anticipation for GTA is going to be huge for Take-Two Interactive. All right, so Upstart is going to report earnings later this week as well, so Tuesday. So tomorrow after the bell, Upstart is scheduled. I am looking at some cash secured puts on this stock, not before the earnings though. I feel like before the earnings would be a little bit of a hit or miss with this company because, I know they're going to report a loss. There's no doubt about it. Like, I know they're going to report a net loss this quarter. The revenue growth might have really leveled off because we were just talking about this, right? As interest rates are going higher, what are the companies that are going to get affected the most, right? As the volume drops off, it's lenders, right? Sure, they benefit from the higher rates and their net interest margins might be higher, but the volumes at which they were processing loans obviously fallen off quite substantially. And Upstart, since it's in like an intermediary, right, fintech company using AI to finance a lot of the lending activity, in my opinion, the revenues are going to be either more or less flat. They might even grow, but profitability most certainly is going to take a bit of a hit because their expenses have obviously grown substantially higher, much faster than the revenue growth. So that's something that we talked about in the couple of previous earnings calls that Upstart reported. So right now hitting a new 52-week low down to 1881. I do think that Upstart still has maybe an opportunity offer here. Looking at December 23rd, or let's just do December 23rd, just about a month and a half. Some cash secured puts may still have some value, like $15. We're looking at 15 minus $1.41, 13.59. So, all right, 13.59. So we're doing $1.41. So that's a 10% rate of return, right? That's exactly what I'm talking about. 10% in about a month and a half or in 46 days roughly is incredible, right? I would take that all day. But the problem is that can Upstart fall to $13.50 after earnings? That is a 32% drop. Maybe not. Maybe the most it drops is 20-25%, right? That's usually the drop that we've seen for Upstart around earnings. Like every time earnings have come on, we've seen a drop of about 20 to 25% for this company. Like this time, Actually, it did drop 56% once, but that was like the first earnings that they reported, cut guidance, slowing down substantially. Yes, ST, it is a Tika. So, not Tilak. I don't know what that is. Mass, did you get any presents for your birthday? Yeah, I did. I got a couple good presents. So, yeah, Take Two Interactive also acquired Zynga, so they will put out stuff for mobile users as well. The earnings call will give us more insight. Yes, so I think that's also a big tailwind for the company. That's another lever that they can pull on when it comes to growth. Brandon, thank you so much. Yeah, I would have never missed it, obviously, for some of these special occasions. So I really appreciate it a lot. Thank you so much, you guys. So QQQs, 42 basis points. Let's just kind of recalibrate to some of the individual stocks. And before I do that, I want to show some charts here that I forgot in my other technical videos. So this is Apple's chart, right? This is where we'll come down to. This is the weekly chart right here for Apple. A very, very interesting trend line that it's kind of following up with, right? Apple's been actually weak in the last week. It was down over 11%. That's, roughly $400 billion market cap in the last week alone that it pretty much lost. I did a video about this. Almost $4 trillion in market cap has been lost among the big five, and including, I think, Microsoft, in the last 9 months, right? 10 months. Actually 11 months now. So year to date, pretty much year to date, over almost $4 trillion in market cap has been just like gone. And Apple alone lost like over $400 billion in the last week. So this is a trend line that I think is really important for Apple. If it validates this today, great. If it breaks down, right? If it actually starts to break below this level, well, then, I could see Apple in the low 100s. Like that, that could be a pretty substantial technical breakdown, which could put a drag on the markets as well. If you take a look at Amazon already had that breakout to the downside this past week, right? So Amazon broke down. Actually, this past week was an acceleration and continuation of that momentum. The week before that, I think that was the earnings week for Amazon. Yeah, that was the earnings week when we actually saw that decline. It got bought up, and look where it came back up to. Like it pretty much came back up to retest this level and then continue its slide lower. So for Amazon, we're kind of seeing a little bit of, think of a fast forward of Apple, right? Apple's kind of testing this testing this support here very strongly, a big higher low, and Amazon's already broken down below this. So we'll see if Apple kind of validates that level or breaks down. And for Amazon, really, if you continue to see that slide lower, there's a couple different support levels here. There's one over here in the $80 range, all the way down to 65. Let's see Google here. Google's already starting to break down as well. So you'll notice that Google's also breaking its long-lasting trend line. It did that same thing during COVID, right? So COVID-19, we had a pretty substantial drop for Google, down 36%. This time around, we're seeing another 46% run. And this is the trend line that we're kind of breaking down, right? So we got Amazon, we've got Google. AMD, not a surprise here. AMD kind of broke down from this rising wedge pattern, and it's now coming down to a previous resistance here, kind of validating that support for the most part. And of course, there was a head and shoulders also in play, which was marked by over here. So left shoulder, head, and then right shoulder. We got that breakdown below the neckline over here for AMD as well. So there's a couple different patterns that, one of them I break down in my market updates. Another one is like a more long-lasting pattern that AMD is breaking down of. So a couple support levels. There's another one down here sitting roughly in the 30s if, of course, this selling pressure accelerates to the downside. And of course, not to mention Meta. Meta also has broken down pretty substantially from this support here, and we've only seen that acceleration to the downside. So we've got lots of companies. Let me see what Microsoft looks like. Yeah, so Microsoft also with a pretty substantial breakdown of its overall pattern. So really what Microsoft and Google have is, or AMD and pretty much a lot of companies, is downtrending channel, right? Lower highs and lower lows. And this was a long-lasting trend for Microsoft, which it broke down. So you've got Amazon, Google, AMD, Meta, Microsoft, all breaking their long-term trends, right, from a technical standpoint. Apple's the only one that's pretty much been holding up for the most part, but this week is pretty much the judgment day, right? If it breaks down, there could be more downside for the overall market, some more drag on the entire indices as well. And if it does validate then maybe we've got some more breathing room. Maybe we pretty much bought some time, but it doesn't obviously look super great. And then Tesla is also in this downtrending pattern where it continues to make lower highs and lower lows. Anything significant on November 9th? So based on our calendar, November 9th, we've only got John Williams speaking. We got Thomas Barkins speaking. And then in terms of earnings, we've got the Trade Desk, we've got Rivian, we got Digital Turbine, Fiverr, Unity Software. So nothing significant that I know of right now, unless you know something that is going to be of super importance. Let us know. But economic calendar wise, those are the only things that I have. A bigger significance obviously is going to be the CPI numbers on November 10th. So yes, in mode, I will take a look at definitely. So do you think there wouldn't be a recession if you think inflation is going to be 4 to 5% throughout 2023? Oh no, there will still be a recession in my opinion. Inflation's eventually going to come down, but one of the ways inflation is going to come down is through a recession, right? So usually what happens is the Fed only controls the demand, right? So we've talked about this before, but really they have no control over supply. So all they're trying to do is reduce demand to make it more in line and more balanced with the supply. And the way they do that is by creating an environment where people spend less, right? And when people spend less, when there's less transaction of money, when there's less velocity, right, at which money is exchanging hands, that means lower growth, slower economic activity, lower earnings, and all of that creates a potential environment for recession. Not only an economic recession, but also an earnings recession. So even if inflation does come down, I think there is going to be a recession in 23. Well, I might also suggest that we're already in one, but look, NBER has not even announced it officially. So it's really up to them when they actually make that decision. But, the elections are coming up, so I doubt any type of news about a recession are going to even surface because the unemployment rate really is low, right? So until unemployment rate starts going higher, and we've already seen that from the last report, 0.2 percentage point increase, if that continues to go up, then that's definitely going to be putting pressure on the economy. So Oscar, careful, this is how I got an extra 5,000 shares of SoFi. I thought no way they can drop 25% in 1 week. Yeah, and really, this is this is a market where anything is possible really at this point, right? Nothing really surprised because I tweeted, I think last week I tweeted, what is one stock that you think is trading at an insanely low price? Like you never thought that this stock would be trading at this price ever, right? So we got lots of people commenting, right? Google, Meta, Tesla, there's a lot of companies on that, but really goes to show that, this market's just now very sentimental driven, right? It's a very emotionally driven market. That's what it is. There's no fundamentals in play. There's no technicals in play. There's mostly emotions kind of taking over, and investors are just, selling off stocks en masse based on sentiment and how they feel in that environment, right? That's really what's been for the market. So again, thank you so much for your best wishes, you guys. I really appreciate it. And yes, I did take a look into Meta's job cut report. I think they are slightly higher at the moment. So they're pushing up 3.3% right now. And look, investors are responding, right? That's exactly what we wanted. Well, not we as in me, but like we as an investor community wanted from Mark Zuckerberg, is to kind of tell us, okay, if the economy is weakening, if you're going into a recession, what are your plans to make us more lean? What are your plans to get costs back under control? And I think he does have a pretty good sense. He has a very good plan of doing that. But this is all despite the heavier spend on the metaverse, right? That is still staying. That is not going away anytime soon. They've already spent over $20 billion in the first 9 months in R&D, and they're only accelerating. They've mentioned their overall spend, including CapEx, is going to be closer to $100 billion next year. So those are some pretty substantial numbers, right? If you think about it, $100 billion for a $250 billion company, that's more than 30% of their overall market cap they're spending, So I think the markets have made themselves very clear what they like and what they don't like. What they do like is short-term profitability. And as crazy as it sounds, but that's what they want. They want profits now. They don't want profits 10 years from now. Nobody's got time waiting around for 10 years. Like, unfortunately, institutional investors, hedge funds, they don't really have time to wait. Like, think about it this way. Bill Ackman sold his Netflix position, did he not? Like, think about it, like, logically. Now there was a big headline about it. Bill Ackman sold when Netflix fell 35%. And does anybody remember? What was his reason? What did he say? There was a one-liner. Anybody remember? Anybody? I'm sure plenty of people remember it. But what did he say about Netflix? What did he mention about Netflix when he sold for a loss, right? That pretty much made headlines. That, Bill Ackman taking a huge loss on Netflix, selling out of his position after a 35% drop in stock. Let me see. I'm sure lots of people remember it. Let's see if anybody comments. Yes, so SR, we did talk about the Meta job cut report. Talked about it. I feel like the chat is like super delayed. So, okay, so people are saying expenses, no moat, it could go lower. No, so what he really mentioned on CNBC, this was, again, I think it was on a call, was that he doesn't have the time to wait around for Netflix to come back, right? So he mentioned that he doesn't have the time to wait around for Netflix to come back. So yes, he did mention that we lost confidence in our prediction, but he also mentioned that he doesn't have the time to wait around for Netflix to come back. And look what happened. It did go lower, but it pretty much rallied all the way back to the same level as it was before the earnings came out, right? It pretty much has over 85% rallied. So that's the whole point, right? That's the whole idea, is that hedge funds, Wall Street, they most definitely look for short-term profitability. Most definitely, right? And that's why I always mention that it's a very, very, I don't know if it's a word, but it's a dispositioning in the markets where institutional sometimes gets invested long-term. Retail gets invested long-term, institutions invested short-term, and that's where the dispositioning comes from. Where on short-term weakness, institutional sells, retail suffers, and then long-term, once the profitability starts to come back in, that's when institutional jumps in. But that's also where the opportunity is, right? For retail to accumulate. Same thing happened with Tesla when they had no profitability. Not even a single institution, except for, of course, Kathy Wood and ARK, was putting any money into Tesla. Retail accumulated, right? Because they believed in the future, believed in the concept and the idea. Profitability was not there. And when institution starts to come in, you take a look at what happens to the stock price, right? Absolutely goes parabolic when big money starts to flow back in. So that's really, ends up happening is institutional is what drives the market. Big money, right? The whales. They're the ones who drive the market, and these sell-offs are pretty common when they start selling, right? Massively. It's not a surprise for stocks to go down 70, 80%. It's just institutions are getting out, big money is getting out. All right, perfect. So let's see, Disney earnings, bullish or bearish? Well, let's see what their actual expectations are. I know they've been doing really well in terms of their growth, but their average advertising revenue per user is actually really, really low compared to Netflix. So even if they do take them over on a number basis, like, right now, I think considering Hulu, ESPN, all these Hotstar different combines, they're sitting on more subscribers than Netflix, but their ARPU is far lower than that of Netflix, right? So on a revenue basis, I think they still have a lot of work to do. Expectations really for Disney are 55 cents per share on 21.2 billion. And support level really is going to be at around $81, $82 per share. Yeah, Steve, I think that's a great point, and that's exactly what my emphasis is. Institutional hedge funds will always look at short term as they go by quarterly profits. Absolutely right. Absolutely, 100%. Fully agree, and that's what their goal is, like to beat the market, right? To beat the S&P 500, so we can get more and more clients and make our marketing pitch decks look really good. Look, like in the last year, we've beaten S&P 500 or whatnot. In the last 2 years, we've beaten the S&P 500. That's where they're going, right? That's why they want to find the best performing stocks in the next 12 months. And the best performing stocks come from companies that are beating earnings. Quarterly earnings are good, they're growing, and not for Google or Microsoft or any of these companies, even staple companies. Like even if you look at some of the dividend stocks, right? Staple stocks, they're down, right? So utility companies, staple companies, everything is down except for energy this year. So that says, did Kathy call you to wish you happy birthday? No, not yet. But I'm gonna look at her video. By the way, markets are open here. Let's just get right into it. So Nasdaq's opening up 41 basis points right now. We got the S&P 500 also opening up 40. The Dow Jones up 115 points right now. So Tesla is slightly up 0.5%. We got AMD pushing up 1.7, so back over $63. And Google's also up over 1% at the moment. And Apple's also getting bought up, so back up to 138 right now, with Meta's up over 5%, AMD's up over 2%. Meta, really just stay up. That would be my birthday gift, please. Stay up. Just watch Meta sell off and give up all of its 5% gains by the end of the day today. That's usually how it goes. Sentiment's so weak on Meta that it just completely dies off. Yeah, Disney. I actually have done videos on Disney before, so you're more than welcome to watch. But it's got a very strong support at around $80. So this green rectangle right here is a level to watch for Disney, right? So that would be the level to pay attention to for this stock. I mean, really, really attractive at these levels, and I would say RSI MACD not quite overbought, but it's definitely been down substantially, so 55% down from an all-time high basis. So Tesla's kind of approaching 200s again, right? Tesla's getting closer and closer to like that 190 range. Once again, we have seen a lot of weakness for Tesla recently. It's just mostly been sideways, and really this formation. Can anybody try to gauge what this kind of looks like? This pattern, what we're seeing right now. Tesla selling off and then mostly consolidating sideways. What this really entails from a technical standpoint. Yes, Occidental reports on Wednesday, so we'll break that down as well. So airline industry, I think, great question. I think it's mostly recovered. I mean, most of the revenues for a lot of these companies, Southwest, Delta, United, are pretty much back to their pre-pandemic highs, right? It's just that profitability is not quite there yet because of so many things. And of course, the companies are just burdened with so much debt that it's going to take some time, because they pretty much got indebted during COVID to make sure that they weather through the storm and survive. So I think their balance sheets are not great. I think Southwest is one of the best balance sheets among airlines, but I think it's from a revenue standpoint, from how many people are traveling standpoint, it's pretty much booked. Like I, been traveling for the past 1 month, and everything just seems to be back to normal. Like nobody wears masks. Obviously, airlines, pretty much every single flight I took was booked all the way. It was full. And every hotel I booked was pretty much full too. Like I had to really struggle to find rooms. No kidding. I used to look at Airbnb, hotels. The travel industry really is fully back, in my opinion. It's just, I'm seeing it firsthand, and not just from like a small data set, just like really traveling to a lot of places and seeing it. Hotels, flights, a lot of things have been booked. For some time. But anyway, for Tesla, I think, we're seeing a little bit of a bear flag formation here too, because really what we're seeing is a little bit of consolidation sideways right now. So it's just been, trading in that range after obviously selling off quite a bit. So this right here is a sell-off, a little bit of consolidation. So we'll see if you actually do get a breakdown. If we do, 183, 180 is going to be that next support level to really be paying attention to. And it's really been a little bit weak here for the last couple of days, just been mostly trading sideways. And Tesla's been down about 14% in the last couple of weeks here. So if you take a look at the last week, Tesla, I think, was down over, let's see, Tesla was down over 9%, right? 9% of a $700 billion valuation is about 70, 80 billion. So yeah, it's been pretty brutal for Tesla as well. Oof, look at that drop for Tesla. So yeah, what we're really seeing here is a lot of anticipation, a lot of consolidation. The markets really aren't moving all that much. I think all eyes and ears are going to be focused on Thursday. Thursday's inflation print. If you take a look at the Fed funds futures, we are right now pegged for, I think last time I checked was 50-50. Might have been a little bit, yeah, so 56.43, so still pegged for 50 basis points. That's pretty much the consensus. 50 and then another 50 for us to get us to 4.75 to 5%. William, what's with all the quizzes? That's how we do things. We do a lot of pop quizzes here so that we can engage you guys. You know what I mean? So that's, William, that's what we do. We got a lot of pop quizzes, So it's exciting, it's fun, it's more engaging. So thank you for participating. By the way, I haven't checked out the poll. Let's see what the expectations have been. So 57% expecting the markets to be green today, more than half of you. And then 28% expecting the markets to be red. So interesting here. I'm going to end the poll here. And make sure that you guys drop a like. We got 137 likes right now. So let's see if we can at least get up to over 200, 300. I would really appreciate it. So you got to just tap that like there. Man, my chat feels like it's really delayed. What is going on? Here, let me just see it with my actual computer here. Yeah, it's definitely 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 messages delayed on my phone right now. Pretty crazy. Yeah, but NASDAQ pretty much giving up on all the gains here. We're pretty much down to a flat day so far. S&P also, the Dow is only up 26, 27 basis points. Tesla down to 204 here. AMD is also giving up on some of the gains. All right, so Zim integrated. Wow, $24? Okay, so yeah, $24 where it's at, up a little bit over 5%, but definitely been obviously just under a lot of stress, been selling off quite a bit. Square's up 4%, so $62. This is a trade idea that is still in play for our community. So this is a trade idea that I shared just a few weeks ago. We're seeing a little bit of momentum here, 4% back over $62. So very nice momentum to the upside. Walgreens is pushing up, so it's having a good day. There we go, 4% on the upside here. Target and resistance really is going to be all the way up to $41, $42. So that is going to be that level to watch for Walgreens. And then we do have, PayPal pushing up 3%. That's good. NEO is pretty much given up on its gains. It was up, I think, 4 to 5% at one point, trading up to $12.38, but starting to sell off quite a bit here. Once again, and JP Morgan, yes, 30% in the last 1 month, right? It's done really, really well. 30%, yep. So it's also one of our dividend stocks here. Walgreens, JP Morgan, and then Realty Income Corp are some of mine dividend stocks that I have at the moment. And dividends is, what investors might be looking for in this environment. Free cash flow, solid dividends, short-term profitability. That's really tends to outperform in an environment like this. So I think that's what we are seeing at the moment. And then the ones that are red, let's take a look. We got AMC selling off down to 540. It's a new 52-week low for AMC, unfortunately, down to 539. And man, this pattern's just been wild. It's been absolutely rocked back and forth. It's pretty insane how much volatility AMC has seen in the last year. 3,600% move and down 87, 88% from its all-time highs. It's crazy. Ooh, Tesla's down to 203 now. So really seeing some acceleration. I'm just gonna come over here for. So, Caddy, are you coming to the World Cup? Yes, I will be there for just about a day, maybe like less than 24 hours for the World Cup. But yes, I will be there. Dear Caddy, wish you a happy birthday. All the best to you and your good health. Hope your dreams become true. With kind regards. Thank you so much. I really, really appreciate it. Kevin, terminal rates will be over 6%. So, yeah, I think 6%. I think the market isn't priced for that yet, but I think you're right. 6% is possible for the terminal rate if inflation remains sticky, right? If inflation remains above 7 to 8%, I think it's possible that we get up to 6%, but I think that's about it. That's about the number that I could see rates get up to. I think beyond that, the interest payments alone on the debt become pretty substantial, right? So if you think about $30 trillion worth of debt, 0.06, so 6%, really, I mean, this is very, very rough estimates. $1.8 trillion in interest payments every single year, right? That's pretty crazy. That's absolutely crazy if you think about it. So I don't think 6%, well, they could get up to those levels, but I don't think it's going to stay at those levels for too long. I think there's going to be a lot of political pressure. There's going to be a lot of debate. And that's definitely going to be putting a lot of impact on the economy, like a lot of burden on the economy from a spending standpoint. So I think it's possible, but man, wonder what the economy is going to look like at those rates. Meta support at 89. Well, we talked about this chart here for Meta and for a lot of companies. So next support really 72 is going to be that level for Meta. There might be some support at 89, 88. You're right. So there's a level that we kind of bounced off of back in January of 2016. So yep, we're talking 6 years ago for Meta. So you're right. $89 may have some validation here. So that's also a level that we kind of tested last week, but a little bit of a bigger breakdown could potentially get us down to $72, $73. So David says, just bought a bunch of Tesla 203. We'll see. I think Tesla, as I mentioned before, it's got lots of debate. Obviously, it's been one of the most debated stocks over the last year. There's always been this debate about whether Tesla's overvalued, undervalued, what should be the correct valuation. Well, there's really one or two metrics that are, I think, very helpful for investors to gauge, whether the company's valuation is appropriate or not, right? P multiple is one. Obviously, from an absolute basis, Tesla looks incredibly overvalued, trading at 40, 50, 70 times earnings. At one point, it was 1,000 times earnings. But another really interesting metric is, well, that P multiple is great, but what is in relation to, right? Relative to what type of growth, right? That's why you find a lot of the companies, like for example, Meta now, trading at under 10 times earnings. Why? Because investors don't believe that Meta is going to grow, right? They're giving it that P multiple, really, really low P multiple, because they expect the growth is dead, right? The growth is not going to be there. Same thing with Intel. Why is Intel trading at such a low P multiple versus something like an AMD or Nvidia, right? Nvidia trades at 40, Intel trades at 10. They both are in the same industry. Why? Because the growth for Nvidia is much higher than the growth for Intel. I think the same applies for Tesla too. At 1,000, no thank you. At 500, no thank you. At 100, no thanks. But at 40 or at 30 or 20, and now it starts to become very compelling, right? Now it starts to become a very, very interesting story. You've got earnings growing at 50%, 70%, 80%, and could potentially continue to grow, but you're getting that stock at a 20 times P multiple or at 25 or 30 times P multiple all day long, right? So that's why, my fair value's been upped from 150s to 170s now, and I'm willing to start in 190s. That's where my cash secured put is. If it assigns, I'll be sitting in the 180s area, and I'll happily DC it down even further, because then you're getting just a high growth player at a much lower valuation. That's the dislocation. Sentiment can be weak on a stock and it can sell off, but that doesn't mean it's a bad company, right? I think we can all agree that Tesla is a growing company. It's not a dead company. But just because the stock's down 50% doesn't mean anything. So yeah, so Mill says Tesla will go lower in recession. Tech goes down first and then follows what unnecessary goods and then necessary goods. Yeah, so we're already there. Here, in my opinion, a recession is something that needs to be priced in from the market, and it will be. I think eventually when we really start to see earnings come down, and earnings have been relatively flat, but that's also because interest rates were nowhere near where they are now. And when interest rates get up to 4 or 5% by the end of this year, like we can come back and take a look at this chart. Over here, when interest rates are 5%, let's say in, March, so that fourth quarter and first quarter earnings, just man, I can't wait for the first quarter earnings for this year, for next year, 2023. Like, what are they going to look like? What is that number going to be? You've got rates at 4.5%, 5%. We haven't seen those rates since 2007. It's been over 15 years that rates were that high. Earnings are just not going to weather through. Like, U.S. companies are not that strong to keep earnings that high when rates are at 5%. It's just not possible. So once that gets priced in, I think that's where we see a bigger leg down. But that's also going to lead to capitulation, in my view. So, okay, somebody says, in my opinion, at 700 billion valuation is just too expensive. P of 2025 is acceptable to a high growth company. Right now, none of the numbers make sense. Yeah, so, again, Tesla right now is about 40 times earnings. For it to get down to 25, we need it in the 170s, right? So that means it needs to come down a little bit under 20%, right? I think 20% is when Tesla gets down to like very attractive valuation. Like 25 times earnings for a company that's growing at 50% or more in the future, like that's a really favorable PEG ratio, right? So at that point, I mean, numbers are really what's talking, right? Obviously, it's overvalued at 300, it's overvalued at 400, but 180s, 170s, when the market cap's down to under 600 billion for a company that's going to do $80 billion in revenue and about $12 to $15 billion in earnings. So let's see. Yeah, so it's still going to be a little bit over 50, so it needs to come down quite a bit, down to 170s, right? Whatever that 170 market cap's going to be for Tesla. Because even at 600, 640, it's at 40 to 50 times multiple for earnings. Yeah, and M&A brings a great point. Tesla's P multiple was 1,000 back in December of 2020. Now it's at 40 to 50, right? So that's really what we're trying to emphasize on, that as numbers get bigger, P multiples come down, and they will come down. Tesla's not going to be at 50 forever. I can tell you with confidence that 5 years from now, Tesla's P multiple is going to be closer to 20 to 25. It's going to be closer to the market in 5 years from now. So that doesn't mean the valuation is going to come down. That could also mean that earnings are going to grow substantially to bring the P multiple down, right? But it will happen. So Tesla really is coming down quite a bit. I mean, lots of stocks are really. Google's slightly higher, Microsoft slightly higher, Meta surprisingly still holding up. AMD is down 0.64%. We got Amazon down 0.48%. Netflix is down 2.6%. Apple's down 1.5%, and Tesla really kind of leading the way here, down about 2.5%. Palantir 8% on earnings. Another broken soldier here of this brutal bear market. Another soldier down, folks. 8%. This is actually not that bad, right? This is more like a shot in the arm as opposed to what Meta and Netflix and other companies had to go through. Like, this is, like, I would consider Meta got stabbed and Palantir pretty much just got shot in like the finger or something. 8.5% is actually not that bad for a company like Palantir. Whereas Meta, like 25%, right? Snapchat, 30%. And then, of course, Amazon was down 15%. Microsoft and Google, 8% for them, like in terms of market cap, is pretty substantial. So, yeah, 8.5% is like nothing for Palantir. That's like, yeah. So Harsha, do you have videos on reading chart patterns, graphics? So we do have a technical analysis course where we go over 40 plus lectures there. all patterns, all charts, everything is discussed with case studies over there. I do have some tutorials on YouTube as well, but if you want a more sort of like a curriculum based step-by-step learning, then that is available. We do have a 50% discount on that. Yes, so they did miss on earnings, not a surprise there. 1 cent versus 2 cents. So again, that's been always an issue for Palantir, and I'm assuming a lot of it because of stock-based comp. And Candy, unfortunately, Palantir got decapitated previously before being shot in the finger. I think that's what it is. I think it's just a headless person getting shot in the arm again. That's what Palantir kind of feels like. Yeah, they missed on earnings. I think a lot of it coming from stock-based comp, unfortunately, and that's pretty much what Palantir is known for. Yeah, Walgreens pushing higher, right? Walgreens getting a big boost here, 5.5%. And again, dividends and free cash flows, that's kind of like what's moving today. Like I said, we do have dividend stocks, Realty Income Corp. Okay, Realty Income Corp is up a little bit over 45 basis points. Walgreens also pushing higher today, of course, and then JP Morgan is on the move as well. Let's take a look at SOXL. Okay, so slightly under $9. Up 33, actually down 33 basis points. Upstart an all-time low. There we go, under $19. And that's exactly why I'm a little bit wary of taking a position pre-earnings, because I know that they're going to report a loss. It's just not a question. They guided for a loss, and things have really deteriorated since then. I'm really curious to see what their numbers look like. Yeah, 169 million revenue expected, negative 8 cents per share. Starting to break down here. One thing I will mention though, like if on earnings the stock drops by 20%, and considering that their earnings are relatively like okay, I'll definitely take a look once they report earnings. I will be looking at cash to good puts, and I'll be going down to the lowest strike possible, because even then, 1 month out, I can easily get 5 to 6%. I know that. Like once they do come out with the numbers, I think the put volume is going to be so high if the stock drops, right? If you actually see a 20-25% drop here in Upstart, cash to good puts all the way. I'll be going to the most lowest strike possible, and I know even then it's going to be a good yield. I think even then it's going to be a decent yield for Upstart. Like, look at this, $11 is going to actually pay you 4%, right? 4.3%. If you go down to 11 cents, right? Actually 12 cents. If you go down to $12, and that's a delta of 0.128, right? Really, really low delta. There's not a lot of volume though. Right now there isn't, but again, like I said, after the earnings, I think the put volume might be higher, so you'll have more liquidity then. Is my expectation. So again, once the earnings come out tomorrow after the bell, I'll be looking at these put contracts to see if you can take advantage of that. Yes, so M&A, for your real strategy, do you already know what type of stocks you're going to trade on? Yes, so I have a watch list that I know that I will be trading certain stocks. Again, there's not going to be a lot. There's only going to be 4 or 5 names that we're going to be running the wheel strategy on. And that's really what we need. We just need 1 trade per month to hit our goals. And again, it's not like, and sure, as the portfolio grows and gets bigger, we'll take on more positions because we don't want to be over allocated into one name. So everything is going to be discussed, when we do our challenge then, starting January 23. Super excited for that. We're going to be running the wheel strategy, and then, of course, we'll be allocating into different names as the portfolio grows. But to begin with, yes, there's only going to be a handful of names that we're going to be running the wheel on. So super excited for that. And again, the targets are not like, super high. We're not looking to get, 40, 50, 80%. We're just 2% per month. And minimum amount of capital, pretty much you can start with whatever you're comfortable with. Really, there's no minimums. You can start with however much you are comfortable with if you want to follow along, obviously. I'll be sharing all the things, like doing weekly private videos for the members and kind of going through the portfolio and what the analysis is, what the research is, what my thought process is. So you can follow along and really decide, whatever works for you. So thanks so much. I really appreciate it, Hassan. Adobe we have talked about it. Yes, so well, you need cash puts need at least 100 price for each stock. Yes, that is true. And like I said, the whole point of this is really to go through a whole process, not necessarily for you to follow like every trade. I still expect all of you to kind of do your own research and diligence on these. But really, it's going about the whole process, the thought process, the research and the analysis that goes into picking strikes, picking the Greeks, and then kind of generating that passive income. That's really the goal there. So all right. What was I answering? Adobe, we have analyzed in the past. I think it's a fantastic company, very sticky business model. I've been using Adobe products for like over 4 or 5 years now. Just they keep raising the price on me, but I have to pay because I really don't mind, first of all, and second of all, the services is really good, right? The products are great. I'm just so used to Premiere Pro, Lightroom, Photoshop that I just can't see myself using anything else. So it's a very sticky business model, recurring SaaS company. You know, you expect high margins. That's what they offer. Great profitability. You know, consistent revenue growth. I mean, take a look at these. I mean, this is what beauty looks like. You know, like this is what beautiful fundamentals look like. Strong, consistent revenue growth. Strong, consistent earnings growth. You got high margins. You know, they're doing $5 billion off of $15 billion revenue. That's 33%. Satish says, Kat, if you drink wine tonight, then one more glass from all of us here. I will definitely celebrate with all of you and share pictures on Instagram if you want to connect with me there. But man, I have had a lot of drinks in Europe. My liver needs a break. It definitely does need a break. I've had too much over the last 1 month. So probably just water. And I don't know. It's my birthday, so maybe I'll have a little bit of something. But nothing too crazy because it's been a crazy month already in the past. So, Puneet, how does it feel to be back? Pretty good. Good. Actually, you know, it doesn't feel any different. So it's, just mostly been jet lagged for the most part, but that's, you know, obviously going to go away in a few days. But man, Switzerland, I would definitely recommend if there's one place on earth that everybody needs to go see, it is definitely Switzerland. And I haven't really, you know, traveled a lot of Europe. I've only been to like the UK, Italy, and Switzerland, but man, oh man, I can already tell it's, you know, one of the best places to actually go if you are really into like the beauty of the planet, like in terms of nature, right? The lakes, the mountains, the trees, the snow, like it's fantastic. So I highly, highly recommend it. Highly recommend it. Sorry, Malibu place needs to be updated to a house in Switzerland. Yes, Edmonton, Switzerland specifically is fantastic. Amazing. So, but yeah, I definitely recommend it if you're planning a trip. But anyway, so that is it gonna be for today, everyone. I really, really appreciate it. You guys joining and tuning in for the live stream today. And again, thank you so much for the best wishes. I really appreciate it. And truly grateful for each and every one of you. So thank you. Markets right now slightly down 20 basis points here, down about 6 flat, right? So there's a lot of flatness in the markets, a lot of calm before the potential storm that's coming in later this week. And we'll find out soon enough what those inflation numbers look like. So thank you so much. I really appreciate it. As always, make sure that you drop a like and subscribe to the channel. And don't forget the biggest discount offering today for 24 hours, 60% off for the fundamental and technical analysis courses. That's the bundle. And coupon code across the site is going to be birthday, right? So all caps birthday. If you want to check that out, link's going to be down below. So thank you so much. Happy investing, and I'll see you all in the next